It is June 8th, and this is, of course, the video log that takes 30,000 to a million. Now, I recorded a video on Thursday about 20 minutes long, and I left the volume on low, and so the entire video I had to scrap it. I just couldn't post it, but I couldn't redo it either. All you could hear is just like the fan in the background a little bit, and I had to boost the mic, the output so much that it was very hard to listen to. So yeah, I scrapped it. I mean, I thought it was a pretty good video too. We talked about a lot of interesting things. Maybe I'll touch on them at some point later. Today I have a super scientific graph to show you. Okay, it's I use to determine like psychology, and it could be a very good psychological indicator. Maybe you could try it sometime, and test it out for yourself. I'll show you in a bit. But first, I'm going to the account. I'm sitting at an all-time high, baby. That's right, 90,608. This is going to be a little bit lower come market open because a lot of these positions, or some of the positions, went up a little bit after hours, and that doesn't take into account the options plays, which freeze at the end of the market day. So, but I'm going to count it. 90,608, all-time high. Of course, even though I'm scoring an all-time high, I am not doing better than the market, even though the market hasn't scored an all-time high, when you take into consideration the week performance. For 1 week, I'm only up 4.33%, and of course, the market, as identified by the SPY ETF, is up 5.24 in the week. So I'm very sad about that, but I am beating it on the month and all the other charts, so that's good. The main reason why I'm not winning against the market is because I've sold a lot of calls. Okay, I have so many calls sold against my positions, and so I wanted to protect myself against some of the downside, collect some dividend, collect some premium, excuse me, and it's I wanted to balance my net bull positions here. So let me take you into account and see all the options. So as always, you can feel free to pause the browser at any moment to figure out exactly what my positions are. So I have the Russian market here. I've sold a call. You can tell by the symbol, the price, the type of option, and the expiration date. You can gather the rest of the information from that. So I have calls sold. I have a few put sells here on O, which are going to expire worthless since it's had a really big rise. And then some of them, look, I lost $400 of value here, or my liability increased by $400 on Norwegian cruise liners, because I've sold a call against it on $19, and now it's like 26 or something. So I'm not participating in any of this upside. I could have had a grand extra or something, but I don't. So it's okay though. I'm not mad at it. But that's mainly why my performance is worse than the market, right? Because I have all these calls. Thankfully, silver's back up, so these SOV calls will end up probably in the positive when they expire. There's more all realty income put sells. You can see NYMT. I have a couple calls here, but I still have 400 shares of NYMT, and it's had a really big upswing as of late, as well as some of the other mortgage trust companies. I'm not sure exactly what the news is there, and I don't know the main reason why all these funds are up, but some of them are rising like 100%. I think Invesco is up like 160, 70%. Some firms are up like nearly 100. And I'm not sure whether it's some kind of rule change or what, but or they got some kind of cash infusion. I haven't looked into it, so if you know what's up, just let me know. All right. Moving on, you can see all these negative numbers here in the options. Minus 114, that means SBRA went up. So you can see minus 100 here on Cameco. So Cameco went up in value as well. And I'm not really participating in a lot of that upside. Okay, EXK was flat. Apple only up $85, and my call is up $60. So the big unlimited upside I have is just call on Apple. So that's what I'm counting on too. If there's a really big upside here from the market, I'm counting for that to capture some of it, or if not all of it. I've pulled 75 shares. I've sold 5 shares of Apple. Trying to completely deleveraged. I'll show you the account leverage ratio in a second. So you can see realty income up $193, and there's the NYMT rise of $444, which is really big considering I have only really 400 shares, because 200 of them are pre-sold at 250. So, and it's already at 360. So that's pretty huge. You can see the total return now. I'm only down 25% here. I was down like 80 or something at one point. $444 up over here, which is not bad on a $2,000 position. Okay, moving on. Anything else that's interesting? Wheat and precious metals. The precious metals are making a little bit of a comeback. RSX up, but of course both of these 200, all of these 200 shares are pre-sold through call options. Everything that has like at least 100 shares, you can bet that I have all of it, or at least a little bit of it pre-sold already. And that's true for all these. ATCO, which was C-SPAN, and SBRA, EW, which is the UK market, DEM, Emerging Market Fund, Dividend Fund, and all of Cameco, really, and some of Energy Fuels. I want to be able to participate if uranium decides to pop off really like super hard. Then I want to be able to participate in the upside for that. All right, so that's the account. Here's the margin breakdown. I only have $1,666 in margin now, so I've completely deleveraged almost. I only have nearly 2% of leverage left to go, and I don't know what to sell for it. Maybe I'll just sell some more calls once they expire, and that will actually bring it down to zero if I manage to sell $1,660 of premium. And I'm probably going to ride like this for a while until things get a little bit more crazy, and that's a really key word, crazy, and I'll show you why in a second. It's going to be interesting. I'm trying to build a segue here. And but the total assets now are 92, which is down from 98 or 99,000 at one point, and the reason is because I've deleveraged, but my account value has risen to all-time high. I've never had this account valued so much, and that's not because I put money in, it's because I've actually rebounded this hard. I was down at about 44,000, 43,000 at my lowest, and now I'm up to 90. So I've more than doubled the monies from the lows. I got hit really hard at the lows. You know, that extra 10% really killed me. I thought it was going to be about a 20% retraction. So I levered up super hard, and I got crushed. And it was very difficult to recover from there. But I'm finally recovered, and now ready for another crash. No, I'm not ready. Not ready at all. So I have to deleverage more, and I have to turn some of the stocks into more secure bonds or something like that, and then I might be ready for another crash. But for right now, if it crashes, I'm just going to stay put. And if it crashes by more than 20%, I'll try to catch another falling knife again. You know, I have videos about catching falling knives. You can check that out if you want, if you're really interested about that strategy that I use. Well, it's really a strategy. It's more like a warning. If you listen to investment advisors or professionals or whatever, they'll tell you not to catch falling knives. But in my opinion, getting cut is worth it. I think that in the long run, long or short run, it's I don't think there are any really other meaningful ways to make a lot of money besides doing that. I did really well in 2018. This time around, I got cut quite a bit, so I bled thousands of dollars. I actually had to take hard losses. I had to buy back puts at a much higher price in order to keep my account healthy. So it's very painful, but you know, I lost tens of thousands of dollars, probably around $10,000-$20,000. And if I hadn't done that, you know, if my account could survive a little bit longer, then I would have been sitting at 110,000 perhaps instead of 90,000. But I'm happy at least to be back where I am as of right now. So the account, all right, that's it. Here's the week performance, 4.33, month performance, 11.5%. 3 months is plus 20%, and 1 year plus 20%. This is the all-time chart. Look at this crazy chart, right? So I really started levering up here. You can see on March 6th, and I thought that okay, we've got to be near the lows, right? This is my other all-time high. It's about 90,000 here, and then boom, I lost so much money. It doesn't say what the low is here. I have to probably zoom in somehow, but it was nearly 43,000 at one point. Let me see if I can zoom in a little bit more. Yeah, 47, but it went down further. Anyway, this is a crazy all-time chart. There's a couple times I've been going negative. Here I was negative 1.5%, but because the money is higher, this is negative 23%. Because the money was is such a larger sum, I can rebound harder and harder. So I'm not afraid of going negative again because I know I'll rebound even harder than this. So that's all right. All time up 43%, which is basically all right. I mean, I started taking this account seriously maybe on August 28th or something like that, 2018. And really did a fantastic job here in December 24th crash. And I had some huge gains, like $30,000, $40,000 of gains. And I just had about 50, $49,000 of gains in the last few months as well. And hopefully that continues, but it's not going to be very easy from now on because I've capped my gains on most of my positions, and there's little upside and a lot of downside. So, but it's somewhat conservative. I'm like 80-90% position bull right now, and if you know how to invest, you'll know that I always try to be at least 55% bull, and even if it hurts, I think that the upside potential is a lot bigger than the downside. I've talked about it a lot before, so I'm not gonna repeat. Okay, it's time for the chart, psychological chart. So here's something I use. I think it's a useful tool. It's a perspective, really, and maybe you can try to think about it. I don't know if you're gonna find it useful, but it's a way to think about market moves, or individual stocks, or just general market psychology, economic psychology. So let me just show it to you, and then I'll go through it. All right. So here it is. 1 second. All right. This is it. Okay. It's the first person versus third person graph. I know it's a little bright right now, but bear with me here. So what does this mean? Okay. So how do I use this? Well, the normal chart is, well, you always feel normal, right? Because you adjust to the environment that you're in. So if you stay within a crazy environment, you're gonna think it's normal, right? So what you want to do is drop yourself into this time period. Okay, so I'll explain it to you by going back in time. All right, so let's say that we're going back to the .com bubble. Okay. Now, a lot of you probably weren't even born then, or were very little to remember. I definitely remember it. I'm not that old, but I'm 36. Definitely remember the mania and what it was like. It definitely got into the unbelievable levels, and I want to show you what that means, right? So if you take me right now and drop me in that time period, and explain something, give me a fact that kind of describes the time period, then I can make a really good determination whether that's normal, crazy, or unbelievable. So the .com bubble, let's say it's this one over here, the first one. Then if you tell me that there's a company that's worth $10 billion, but all they have to the name is a garage and a few bags of dog food, right? And a domain name, like, would you believe that? Would you believe, does that sound believable? Like, not unbelievable as in the way we normally use it, but is it able to be believed? Right? Would you believe me if I said that? If I said today, right? If I told you today that there's a company that's worth $10 billion and all they have is a domain name and some pet food store in a garage somewhere, right? would you believe? Was that sound believable to you? Would you believe it? And if the answer is no, then maybe it's time to take the other side of the trade. But crazy, I don't think crazy is pushing it. Like crazy is still risky. If things are crazy, then you gotta be careful, right? It could go either way. It could go towards believable or it could go towards normal. So what's an example of crazy? Well, this rally is crazy. Okay, but it's believable. Because if somebody took me from the future or from the past or forever and dropped me in this time period so I can judge objectively from a third person. Right now I'm in first person. I'm living it, so it seems normal to me. Like yeah, whatever. We're back at near all-time highs. There's a lot of money printed and blah blah blah. So situation's all right. It sounds normal, but it's actually if you take me from a different time period, I'd be like, okay, this is kind of crazy, right? This is a little bit after there's a global pandemic, riots and um, there's unemployment, this highest unemployment in the history of the world. So many people haven't been laid off at the same time as they were like a month or two ago. Uh, Jobless claims are record high, not by just a few percent, but by thousands of percent. Okay, does it sound believable that the market will be back at all-time highs now? I mean, it sounds very crazy, but I wouldn't say it's unbelievable. And the reason is like there's just so much more money out there right now. All the patient protection plans and stimulus checks and boosted unemployment benefits and all that. And I can kind of see a scenario where people are just putting their extra money in the markets and just boosting valuations, even though they might not be justified. There might be even more air underneath the stocks now than before, and there may be more bankruptcies. But I can see how the mentality of the people could shift this way. Now, what would be another example of things? So I think that's pretty crazy. It's just a very crazy ride, right? Market down 30% in a few weeks, and then over 30%, and then a rebound in a few months. I didn't expect it. It's pretty crazy, but it's still there. It's still a really big risk to short the market, I think. Let's try to think of a different example that's unbelievable. So nothing against strippers, but there's this example in The Big Short, the movie. If you haven't watched it, you have to watch it. It's just so good. And when they're investigating things down on the ground, in person, and they're talking to people to find out if there's a bubble in housing. And so they go to Las Vegas and they talk to the stripper. Sorry if I'm spoiling the movie for you, but and they're just talking, about housing, things like that. And the strippers owns and pays mortgage and maintains like 5 or 6 houses or 7. I forget what the next actual number is. But if someone told me that, there could be a very fiscally responsive stripper out there. Like, I'm not counting that out. But anybody with a regular job like that, if you told me a janitor, I would have the same reaction. That sounds pretty unbelievable. Like, it's hard for me to believe that, right? I would have to see it. Like, I'd need to be like, okay, how? Like, that's just, I don't, if you tell me like, real or not, if you play a guessing game, I would definitely say not real, right? It's very tough to do. Even somebody with a regular job, just working in tech right now, having 5 or 6 houses and paying mortgage on them at the same time, that'd be like very hard to believe, even if they're an engineer, right? Especially in the place where they live. So that's pretty unbelievable. Okay, so that was definitely a bubble there. Other things that might sound unbelievable is, let's see. The Tilray rise was, if you guys remember that wheat stock, that was pretty unbelievable as well. But I didn't think it was that unbelievable, actually. It's just very hyped up and crazy, and the valuation was definitely stretched really, really, really far. But anyways, I think you get the idea. So the idea is you take yourself out of you right now and pretend you're somebody else or yourself from a different time period when things are different. And you drop yourself to this moment to try to make a judgment on whether things are crazy, unbelievable. And when they reach that unbelievable level, oh, I'll give you another example. How about negative oil prices? Right? If somebody, I mean, we were in the depths of this oil crisis and this oversupply and everything else, so it seemed like normal at the time to me, kind of. It seemed pretty crazy. But if you drop me from a different time period and said, hey, guess what? In 2020, the price of a barrel for oil is going to be negative $42. Like, would I say, okay, that's believable, that's reasonable, like it might be crazy, or would I say, no, that's unbelievable? Like, you can't, what do you mean? That doesn't even make any sense. Like, how can somebody be selling a barrel of oil, one of the most, prized resources for humankind right now, for negative money? And that would be the spot market price, right? Well, actually, it wasn't. It was a futures price, but it doesn't matter. I would say that's definitely unbelievable. Okay, so when you see that, you got to try to take the other side of that trade. Unfortunately, many people came to that realization as well, but even I tried to play the other side of it. But there just wasn't a vehicle that's accessible for, Robinhood users and regular brokerage users. Besides futures and some of the more advanced brokerages that would allow us to take advantage of that of those negative prices and buy that stuff up. There's a lot of issues that were not necessarily caused by supply and demand. It was more like a storage issue, and a lot of the play was in the futures, and etc. And the vehicles that we had available to us are just these ETNs that track the price of the commodity through future plays. They weren't able to deliver like what happened. I bought some, not USO, but I bought some OIL, and that OIL, not only was it not going up, but it was actually like staying in price, and then it just went bankrupt. Right? They delisted the symbol from the stock exchange, and they just gave me the money, the originally invested money back. And I had a call options on it, so I was trying to capitalize that because I used this method, right? I used the method, okay, does this sound crazy or just straight up unbelievable? Like, would I be able to believe it? And so it's one tool that I use to try to like figure out where we are in a specific market cycle, and it's really helped me out. It's kind of bringing a sober mindset to a current situation and try to get out of this like being trapped in the mentality of the current news and what's going on, etc. So I don't know, what do you guys think that is going on right now, and do you think things are crazy or unbelievable or normal? Why don't you, if you want, write that in comment. Tell me if you think that things are believable, unbelievable, normal, or crazy, or somewhat crazy. All right, I think I'm gonna leave it like that. Probably make another video on Thursday. Peace out.